Howdy, folks. Welcome to Liberty Call. Today is Wednesday, April 12th, 2023. Hope everybody's having a fantastic day out there. Looks like the markets really kind of fell apart in the last hour or two of the trading day. Things were looking pretty good most of the day, and the Bulls were winning most of the day today. And then the last hour or two, the Bears really took over, and everything finished up in the red. So at least here domestically, let me take a peek here across the globe. A little more green everywhere else, but everything took a slide in that, I guess it was the 2 o'clock hour Eastern time. Everything really started to slide. So, all right, if it's your first time watching Liberty Call, please give me some thumbs up, like, share, subscribe. I'd greatly appreciate it. Let's go ahead and jump into the numbers. Dow Jones was down 0.11% or 38 points, closed at 33,646. S&P 500 was down 0.41, closed at 4092. NASDAQ was down 0.85, closed at 11,929. The VIX was flat today, down 0.05, it's currently at 1909. Canada was up 0.16, Brazil up 0.84, Mexico down 0.47. Germany was up 0.31, UK up 0.5%, France up 0.09, Netherlands down 0.5%, Spain up 0.44, Italy up 0.38, Switzerland down 0.3, and Portugal up 0.2. Russian exchanges both in the green. The MOX was up 0.19 and the RTSI was up 0.21. And the overnights in Asia, the Nikkei in Japan was up 0.57, Australia up 0.47, New Zealand up 0.54. In China, the Shanghai was up 0.41, the Shenzhen Component up 0.05, China 50 down 0.58, DJ Shanghai up 0.11, Hang Seng down 0.86, and the Taiwan weighted was up 0.12. All righty. Let's go ahead and jump on over to today's market recap. I mean, most of the news had to do with the Fed minutes, and everyone was wringing their hands, and then also the CPI data that came out today, which was pretty good considering it was improving, I guess would be the way to put it. All right, well, let's go ahead and bring that up on the screen. Dollar falls, stocks rise after cooler U.S. inflation data. All right, global stocks and government bonds rose on Wednesday following the release of data showing that headline inflation in the U.S. had been cooler than expected in March. The figures suggest that the U.S. Federal Reserve may pause its tightening of monetary policy after one more rate hike next month. The CPI climbed 0.1% last month, half the rate predicted by the market, after rising 0.4% in February. Gold prices rose while the dollar fell. However, inflation still stands well above the Fed's 2% target. This has led to investor uncertainty over when the central bank will pause its campaign to curb inflation. Well, shouldn't we solve the inflation problem first before we worry about lowering rates and helping out the friends on Wall Street? Where was I? Wall Street. Okay, Wall Street stocks initially rose following the release of the figures, but later dipped after it emerged that several Fed officials still saw high inflation as a priority. Johan Gran, head ETF market strategist at Allianz Investment Management, said that the conversation surrounding the Fed was currently focused on when it would change direction. He did not believe the Fed would change direction until it was, quote, painful enough that people are going to shy away from placing their chips on the equity market, end quote. The chief market strategist at Ameriprise Financial, Anthony Saglimbine, don't recognize that name from my years with the company, said that the CPI data showed that inflation trends were moving in the right direction, but the markets may have gotten ahead of themselves because he did not expect the Fed to reduce rates this year. The markets originally trimmed expectations for the Fed rate hike in May. The Fed Watch tool from the CME Group showed a 65.2% chance of a 25 basis point move compared to 72.9 the day before. However, the probability of a hike later rose to 70.5%. The markets still expect the Fed to cut its target rate to 4.334% by December, slightly less than the previous day. This is due to the fact that the economy is slowing and could potentially enter a recession. The Bank of Canada left its overnight interest rate on hold at 4.5% as expected and raised its growth forecast for 23 while dropping language warning of a potential recession. This led to a stronger Canadian dollar. Meanwhile, European central bank policymakers have called for more rate hikes, but have offered contrasting views on how much tightening is needed, indicating that the debate over the bank's next move is not yet settled. The MSCI's gauge of stocks across the globe gained 0.08%, while the Pan-European Stock 600 index rose 0.13%. All right, well, that's the news from the markets for today. Let's dive a little deeper. Fed mulled pause amid banking woes, but sticky inflation forced March rate hike. So this has to do with the Fed minutes. The minutes from the Federal Reserve's March meeting revealed that policymakers were considering pausing rate hikes last month as the banking crisis unfolded, but ultimately decided to pursue further monetary policy tightening due to high inflation and strong economic growth. The minutes showed that several participants considered holding the target range steady, but easing worries about contagion in the banking system and signs of ongoing inflation pressure helped tilt the scale in favor of further hikes. The Fed kept its benchmark rate forecast unchanged for December, forecasting a peak rate of 5.1% in 2023, suggesting at least one more hike to bring monetary policy to restrictive territory. However, recent developments in the banking sector are playing a role in the Fed's thinking on monetary policy, and many participants have lowered their assessments of the federal funds rate target range that would be sufficiently restrictive. The Fed's economic outlook was also soured by the potential effects of the recent banking sector developments, as the staff's projection at the time of the March meeting included a mild recession starting later this year. Recent data shows that tightening of lending conditions has been less severe than many had feared, but Goldman Sachs notes that the data, quote, certainly do not give the all clear just yet, end quote. About 60% of traders expect the Fed to hike rates at its May 3rd meeting, according to Investing.com's Fed Rate Monitor tool, with cuts also now expected before year end. At his March press conference, Fed Chair Jerome Powell pushed back against a pivot, saying rate cuts weren't Fed members' baseline expectations, but also said that further tightening in lending conditions could also be a substitute for rate hikes, sparking a debate on Wall Street whether the Fed's reaction function would be hijacked by the ebbs and flows of lending conditions. All right. So seems like they were kind of split on the as far as the board of governors, as far as what they wanted to do, whether or not they wanted to leave it as is, whether or not they wanted to continue to raise rates. I think they did the right thing personally. Rates, unfortunately, still need to continue to climb until we get inflation under control. All right. Some good news. U.S. CPI falls to 5% in March. All right. The U.S. headline inflation slowed more than expected in March, dropping from 6 to 5% on an annual basis, according to data released by the Bureau of Labor Statistics. Economists had projected that the reading would fall to 5.2%. The monthly rate decreased from 0.4 to 0.1%, but still remains above the Federal Reserve's target of 2%. Meanwhile, core inflation, which strips out volatile items like food and energy, rose slightly to 5.6% from 5.5% yearly. The monthly rate dipped to 0.4% from 0.5% last month. The core number is closely watched by the Fed, and as it considers its next move on monetary policy, and its acceleration will give policymakers further reason to consider continued interest rate hikes. The Fed has been raising interest rates to combat inflation, but the recent ructions in the financial services sector have led some to speculate that policymakers may soon ease their current hiking cycle. However, the high level of core inflation suggests that a rate hike in May remains in play. Later in the day, investors will have the opportunity to learn more about the futures rates when the Fed releases minutes from we already talked about the Fed meeting. All right. Well, that was everything I had for today. If anyone needs anything from me, please go to dsafinancialgroup.com. All my contact information's there. Hope you have a wonderful evening, and I'll talk to you next time. Adios.